Hello traders at CMC Markets. Welcome to a new update by RRG Research for Monday the 17th of April. And I'm recording it on Friday the 14th before the markets are open. My name is Julius de Kempenaer and I am presenting to you from Amsterdam in the Netherlands. Let's kick off with our weekly RRG for international stock market indices. And what we see here is that the strength of the Nasdaq is rolling over a little bit. It's still a very strong market, but seems to be going through a little pause. The overall kind of weakness, like they're still strong, but they're in a pause, is for European markets. So we've got the French CAC over here, we've got the German DAX index over here, and here is the overall Stocks 600 index. And that's all opposite of the S&P and the Nasdaq, obviously, in the US. What we do see further improving is the Japanese Nikkei index. That's an interesting market to keep an eye on, I think. And then at a later stage is like the Indian Nifty. That's still far inside the weakening quadrant, but it is still picking up. Mind you, this is the weekly RRG, so these are the really longer term relative trends against the MSCI World. If we dive in a little bit more granular and we bring up the daily RRG, we see quite a different picture here. We see the S&P and the Nasdaq inside weakening because they are, US in general is a very big chunk of the MSCI World. You could expect a lot of other markets to show up like diagonally across the S&P and the Nasdaq index, and that's exactly what's happening. So if you look at that cluster, you see all these tails moving from the bottom left to the top right, and that's a strong thing. So they have a positive RRG heading, as we call it. There is one exception, and that's the Hang Seng index. That's the Hong Kong index, the Hang Seng in Hong Kong, which has rolled over and is moving into the lagging quadrant. The others are generally moving in the right direction to the top right. So in the near term, it looks as if Europe, French CAC, Nifty, FTSE, all that stuff that's in weakening on the weeklies are picking up. So it looks as if we're going through a bit of a temporary phase where money is moving out of the US into other markets. Dow Jones Index is the exception here. That's obviously the top 30 stocks in the US. They're doing a lot better. So if you want to stay inside the US, I'd say that the Dow Jones Index, or the mega cap stocks, if you wish, is the place to be for the time being. Now, if we put all of that against 0%, and that brings it all into a absolute trend, then you can see that stocks in general are actually doing really well. They are all on the right hand side of the graph, which means that they're all in an uptrend. This is on the daily time frame, and they're all losing a bit of momentum. So they've had their first run, they're kind of rolling over, and if you look at the charts, you can see that a lot of them are running into resistance, and it's sort of putting a hold on the rally, but it's not necessarily negative. So what we can see here is a lot of markets that are still moving to the right, losing a bit of momentum, and there is plenty of room for these markets, and the Nasdaq seems to be ahead of everybody else to rotate from leading into weakening and back into leading, and we know that that is a very strong sign. Let me go into a few of these markets particularly. So here's the Nasdaq, obviously an important factor, and you can see how that is running into resistance. We broke above this previous high here, tested this gap area, and then the former resistance started to act as support. And it's actually still doing that. So right now we're looking for a break above 13,180, maybe 13,200 for the Nasdaq to actually confirm the underlying strength. If you look at the RRG lines, you can see what we were seeing on that rolling over situation where it's losing relative strength. So despite the fact that the price chart is looking pretty good, you can see that in relative terms against the rest of the world, it's actually losing a bit of steam. And quite a similar thing is happening with the S&P 500. Here we're also breaking above that previous high, so that's a good thing. but the next resistance area around 4200 is already showing up. And here also you can see how relative strength is rolling over. So yes, it's good in terms of price. However, in this universe of world stock markets at the moment, there are probably better opportunities to be found. And the one that I want to point out, and maybe two, is here for the stocks index. And although that's also running into a resistance area, you can see the difference in those RRG lines. Here you can see the RRG lines are bottoming out and pushing higher. The RS momentum line is already above 100. RS ratio is starting to move higher. And if I just go quickly back to that S&P chart, you can see how that's rolling over to the other side. So that means that right now, from a relative perspective, it looks that there are better opportunities in the European markets rather than the US. And for the stocks index in particular, if we're able to break above that 466, let's say 470 area, that'll be a really strong sign for European markets, because that'll unlock pretty much upside potential towards those highs here that was set in late 2021. That's 490, 495. We go to the German DAX, and you can see quite similar here. It's struggling with resistance. Once that's cleared, then there is new upside potential for the DAX. And here you can also see how those RRG lines are attempting to put in a low and move higher. Let's quickly move to the FANG stocks. We started to kind of adopt that universe as a highly tradable universe. So I'm going to bring that back on a regular basis here in these RRG research updates. And this is the weekly RRG for these FANG stocks. And what we can see here is that inside the leading quadrant, those names, AMD, Meta, Nvidia, they're all rolling over. They're going through a little bit of a pause, of a relative pause, I think. On the other side, I think the Tesla is rolling over. So that's becoming kind of dangerous, because if you're already rolling over inside improving without even being close to crossing over into the leading quadrant, that's usually not a very good sign. The tails that I'm very interested in right now here on the longer term time frame are Google, Apple, and Microsoft. They're inside lagging, but they have turned back up, and that's a good thing. So for shorter term horizons, we move to the daily RRG, and then we get a better picture here. So we can see that Netflix is actually was very good. It's now rolling over. We can also see the confirmation that Tesla is already starting to roll over on the daily. So it's more granular, starting already to roll over, heading towards the lagging quadrant. And when you bring that to that weekly RRG, you can see that if the daily isn't very strong, how can that weekly actually move much higher? So that's kind of confirming the weakness in Tesla for the moment. The three stocks that we had here that were really good were Google, Apple, and Microsoft. Let's see where they are. So Google, Apple, Microsoft. You can see how small, look at that, that's a very interesting observation here. You can see the tails like on Netflix and Snowflake, they're AMD, they're relatively long tails. That means that they're pretty powerful moves. If you look at Apple and Microsoft, these are super short tails, and you can see how that works. When I scroll that back, when I scroll that image back, you can see how these tails are actually shrinking. Here was Apple was still not a very long tail, but it's like definitely longer, and then in the next it sort of shrinks all of a sudden, and it stays static in one spot. What that means is that it's a very stable, pretty much non-moving trend, and the fact that they are very close to the benchmark also means that they're not very strong trends. So they're kind of dictating the move of the FANG index itself. The one that's more interesting is Google, because you can see how that is started to, it just touched on the lagging quadrant and now is starting to move into that 0 to 90 degree heading, moving in that northeastern direction towards leading, and that's what we want to see. So Google seems to be really confirming what we see here happening in that lagging quadrant on the weekly. So Google is definitely on my list to watch this week. So are Apple and Microsoft, but to a lesser degree. Meta is going through a very good phase, because you can see here how it actually went into a pause, was in leading, rolled over, goes through weakening, and now starts to roll back up. So we know that that is a very good sign. So the daily RRG of Meta is actually confirming the strength that we're seeing here despite that little dip. the main metric here is the RS ratio scale, and you can see how high that is. So both Meta and Nvidia are still super strong stocks, just based on their RS ratio reading. And you can use the daily RRG to actually get into a little bit more granular analysis, and we can see here how Meta is actually seems to be shrugging off that short-term weakness and starting to move back up. Let me go to the chart of Google here. You can see how that is pushing against resistance. Here is that turn of the RRG lines that is putting that little turn on the RRG itself. And you can see if Google is going to break, let's put a nice round number there, like 110, then that would be a real nice trigger for a move higher. And then in that case, I'm looking for, the 120, 125 area for Google. So that could be very interesting going forward. If we look at Apple, then that obviously is a very nice uptrend. We just put in a new low against the lower boundary, that rising support line. And that jump that we saw yesterday is actually very encouraging, because it really confirms that the new low is in place. There is a bit of resistance at that previous high, that's 166, 167. When that can be taken out and Apple can continue its move higher inside this channel, I move to, let's say, 175, 180 area in the next couple of weeks. And then we have Microsoft, kind of similar, took out resistance, managed to stay above that resistance, which is now acting as support, and has been trying to break that 290, 295 resistance area. When that happens, again, we're sort of coming out of this big base that was formed since March. We're coming out of that low here, so you can see how important that level is. If it's taken out, definitely more upside for Microsoft. So all in all, these FANG stocks are actually doing not too bad, or maybe I should say they're actually doing really well, and they're very close to putting in new highs, new relative highs, which is usually a good thing, and that could push that whole FANG index. And if the FANG stocks are going higher, usually means that the US markets are going higher. Finally, here we have Meta, which we saw was rolling over, and you can see how that acts here on the RRG lines. The red RS ratio line is still above 100. That puts it on the right-hand side of the graph. And you can see how that green JDK RS momentum line is about to cross over back above 100, confirming that existing uptrend. And you can see that very nicely here on the chart of Meta, which has just taken out these highs and is again free to move further upwards. Next stop, 236 probably, and then we get into a very interesting area of that big gap that was set in January, but we'll take it when it comes. And then let's quickly move to currencies. Just very briefly, here is the chart for the weekly RRG for currency. You can see the strength of all non-US currencies. So basically everything is on the right-hand side, except for NOK. Canada is very close. Obviously, they're sort of tied. But this means that there is general US dollar weakness going on. If all these are on the right-hand side, that means that the US dollar is getting weaker, has been going through a weaker stint, and they're now all starting to curl back up inside that weakening quadrant. If we bring that to the daily, then we can see that even in more detail. And again, they're all on the right-hand side, which means that the US dollar is now the weakest currency of this universe. That's the G10 currencies. And the one that's really well, obviously the euro dollar, and then Swissy, which is kind of attached to it, but euro dollar obviously very important. That's a chart I want to look at. And then we've got gold here, which is very interesting, because gold was doing really well, and it went through weakening, and it's now starting to move back up again. And as we know, that's a very strong sign. So if we quickly go to those two charts, you can see here how euro dollar is actually taking out resistance in that 110 area. So that means that the euro is now actually definitely confirming. We had this move here. We could have seen this as a very, on that monthly chart, we had that very heavy resistance area around 110. We dipped and we struggled, and now it looks as if we're actually leaving that behind us. And that opens up the way for more upside for the euro against the US dollar. Let's finish it off with the chart of gold, and you can see how that has been rallying, and it's actually getting to the area of the all-time highs. You can see these two extremes here. In August 2020, that's around 2100, and then we tested that area again in March 2022, and we're now very close. I think the real resistance was around 2000. These are just two like individual spikes. But the real resistance has been taken out. If we can take out 2075 on gold in US dollar terms, I think there is definitely a new rally for gold underway. Ladies and gentlemen, this was it for this week. Thank you for watching, and I hope to see you again next week at a new update by RRG Research. Same time, same place.